Bro, you know how to mark off the charts. You know how to wait for your entry signal. You know how to trade in the correct session to trade, the time session to trade. But you simply don't know when to enter your trades. You're either entering in no man's land when the move has already happened, or you're just simply too late and the train has took off. You need help. And this is why you click the video, so you can get that help. The strategy that I'm about to show you allowed me to flip $50 to $700 and also just flip $60 to $100,000. Stay tuned for that video. But enough talking, let's get into the video so I can show y'all how to make some money from the markets and not overcomplicate it.
All right, y'all, so finding an entry zone is very simple. I feel like a lot of people make it hard, but it's extremely simple. So I have two ways of finding my entry zones. I have trend trading, flow of the market, and then we have counter trend trading. When we're trading with the trend, it is important that we have two time frames in sync, the daily and the 4-hour time frame. And when we're trading against the trend, it's important that we have two time frames in sync, the 4-hour and the 1-hour. The daily is just an area where we're looking to take that trade from. You can obviously see the daily's bearish, but the 4-hour and the 1-hour were bullish. Counter trend because the overall trend is bearish. We'll get there here in a second. So when we're finding the flow of the market, when we're looking for that area of interest with the flow of the market, typically what happens when the daily time frame presents us with the break of structure initiating this continuation move towards the upside, the 4-hour should be doing the same exact thing, initiating this break of structure as well on its own time frame. So as the daily gives us a breakout, the 4 hours in sync giving us the same breakout. But now when it comes to finding a zone to where we're looking for an entry, we are looking at the 4-hour time frame. Since we know that the daily and the 4-hour are already in sync due to this break of structure continuation move that's happening, now I use the 4-hour time frame to find my area of interest to enter this trade. So on the 4-hour, right when price gives you the break of structure, like we talked about before, what are we? We are a simple break, retest, continuation type of trader. So knowing that, when we're looking at the 4-hour time frame, we can see clear as day price give us a break of the overall structure, right? Continuing the trend towards the upside. But the last break of structure inside the overall trend happened around here. This is when you grab that box tool and you mark your zone off, due to this being the last structure break price shown us on a 4-hour time frame. And then once price works its way back down towards this area of interest, the daily time frame not only taps back into the daily break of structure, but ultimately it allows you to get the retest of the 4-hour break of structure before continuing towards the upside. Don't worry, I'm going to show you an example in the market with the candlesticks and all that, so you get a better understanding of that. And then for our counter trend trading, this is when we use the 4-hour and the 1-hour. The daily time frame is just showing us where we're at in the market in order to utilize the 4-hour and the 1-hour to our advantage. So when we are counter trend trading, when we're looking for setups going against the trend, we use the 4-hour and the 1-hour time frame to find this area of interest. On the daily time frame, we know that this is a counter trend trade due to us being either in an uptrend or a downtrend. In this case, price was bearish, but it got back above this daily structure point. So as soon as the daily time frame breaks above, this is when the 4-hour gives you the break of structure towards the upside, going to a bullish trend. And then the same thing as the daily, well, the same thing as the flow of the market. When the 4-hour presents us with this break of structure, the 1-hour will be doing the same exact thing, showing us the continuation move towards the upside. Now, when we're looking for the retracement to take place and we're looking for our entry zone, we will be using the 1-hour time frame, since the 4-hour and the 1-hour are in sync heading towards the upside. So on the 1-hour time frame, what I will be waiting on is the last break of structure. We see price have the continuation move, giving us the overall continuation towards the upside, but the last structure break inside our overall structure happened around here. This is when we grab that box tool and we would mark this off. And same thing, you see how the 4 hour, as we're retracing back down towards this 1 hour zone, it taps back into its own break of structure. And then this also just allows us to get the tap back into a 1 hour break of structure before we then continue this move back towards the upside. Now we're about to jump into the market where I can show you some winning trades that we took going with the Florida market and some coming from counter trend trading. And also, it is important for us when we are trading either the Florida market or the counter trend structure, we have to be either above or below that daily area of interest. Again, it's going to make sense, so just stick with me and let's jump into the markets. Also, I know some people will say don't take counter trend setups. Well, you can listen to them, but I'm going to take counter trend setups because the trades that we have documented, you can obviously see majority of my trades are counter trend setups. Majority of my wins are counter trend setups. You can still trade counter trend setups. You just have to have confluences that match up that allow you to get a higher probability of those trades winning. So yeah, you do what you want with this information with the counter trend trading. Me and my students are going to continue to trade counter trend setups and continue to profit off of those setups. So again, let's get into the markets. We're going to start first with the Florida market. So give me a second. Okay, so starting with CHF JPY, this is the Florida market trade. And how do you find a Florida market area of interest? Let me show you. So starting on the daily, my objective is to identify which way the market is moving. At the moment, we saw price go from this bearish to bullish trend, and then price flipped once more, getting back in a bearish trend. We then had this huge retracement all the way around here, not breaking past our lower high, but showing rejection, still maintaining in this bearish trend, which is good. Price then had the continuation move towards the downside, and when we had this continuation move, you can see how we then had the break of structure. But before we continue, when we had this break of structure, we can see how we had this impulsive push towards the downside, giving us this breakout move towards the downside. Now, if we go towards the 4-hour time frame, we see that price is doing the exact same thing. Keep in mind, this is our daily structure. Say if we draw out the 4-hour structure down, what happens? The same time price gave us the daily breaker structure, you can see the daily had this push towards the downside, which allowed the 4-hour to have this push towards the downside, right? We have the 4-hour breaker structure, we have the daily breaker structure, both time frames being in sync. Now, since we know both time frames are in sync, where can I see the daily time frame retrace to before we then have the continuation? Well, since we know that we're in sync, I use the 4-hour time frame to find my area of interest. And again, how do we do this? On the 4-hour time frame, you just draw out structure, and wherever you see the last break of structure take place, boom, which is around here, we grab that box tool and we mark it off like so. So now we have the recent breaker structure. We have my zone marked off. Can we use this zone as a entry level? Well, that depends on how many rejections price shown us towards this recent break of structure. Since we marked it off, since we know that this is the last break of structure, our objective now is to count the number of rejections price has shown us. I want a minimum of 2 rejections or more. As long as I can see 2 rejections towards the zone, that is enough rejections showing me that price is struggling trying to break through this zone, either going towards the upside or going towards the downside, and I can use this zone as an entry level. We have 1. I count this because we're in the vicinity of the zone. That's 2 rejections. We have 3 rejections, this long wick around here. If I continue to go towards the left, we then have 4, 5, and then if I want, I can drag this out, continue to drag this out towards the left. We then have 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 rejections towards this area of interest, which is more than enough rejections from this zone. So now, since we know that we have the correct number of rejections, we know that the daily and the 4-hour are in sync towards the downside,
and we have our entry level. The only thing we want to do now is allow price to tap back into. And if we fast forward, we can see price retrace perfectly back towards this area of interest. Once we got back towards this area of interest, an important rule which I just talked about was price being below our daily structure point. Well, if we go back towards the daily time frame, and again, we just mark this off like we've done already, mark this off as daily. You can see how price is above this daily zone and we're looking for sales. I wouldn't sell when price is above this daily zone, because if we go back towards the 4 hour, what happens when price is above this area? We are buying back towards the upside. I don't want to sell above this area of interest because it has a possibility of continuing towards the upside. So what do I want to do? I want to wait for price to get back below this daily structure point, showing me a confirmed sell. Why? Because when we take a look again at recent data, once price got back below, we can drag this out. Once price got back below this zone, what did we do? We dropped below, we came back, retested this zone, and continued towards the downside. Came back, retested, continued, right? So I want to see that same thing take place. So now, if we just continue to fast forward, what did price do? Price broke back underneath our zone. As you can obviously see, it gave us this beautiful bearish variation pattern, forming 3 bearish candles, strong candles, engulfing past that previous bullish candle. On top of that, getting back underneath our daily zone. And what happened after we found this entry? Price went directly towards targets with ease. And what is this? CHFJPY. This was February 16th. I'm going to pull this up in the Discord and I'm going to show y'all. We called this out with the Discord and we caught this trade, so y'all don't think this is just fugazi. So give me a second. All right, y'all can see right here, February 16th, 2025 at 8:51. We are active in this trade. This is CHF, Switch France, Japanese yen. Activated in this trade. And if I go back here, we can see we got activated CHFJPY. We were activated around 8:58, right? Yeah, 8:51. So around here was around that time. You can obviously see it's the same exact structure. If you look at it from the 30-minute timestamp, boom, boom, right? You got this, same exact thing. And then, like I just said, price went directly towards targets for a 3.56% in return. And if I continue to scroll down, this is where we flip $50 to $700 something dollars. Boom, same thing. You see right here, this is the 4 hour time frame. Boom, boom. So amazing trade on CHFJPY. This is how we find your area of interest to then capitalize and ride this trade towards the downside. Give me a second. I'm about to give y'all another example, flow of the market example, and then we're going to get into a counter trend setup. Okay, next we have USD CAD for the flow of the market trade. This trade we did take in April. I'm gonna pull it up in the Discord. So just give me a second. After this breakdown, we'll pull it up so I can show you all. We called it out. We took the trade. Same thing, right? Blase, blase. So in the daily time frame, what's our objective? Is to identify what trend the market is in. On the daily time frame, we can see our price is bearish. We then had the continuation move towards the downside, breaking past these lower lows. And as soon as price gave us this impulsive move towards the downside, presenting us with the breaker structure, I want to see if the 4 hour did the exact same thing. The 4 hour time frame did the exact same thing. You see how we had this impulsive move towards the downside, showing us a breaker structure on the 4 hour. You can see the daily and the 4 hour time frame are doing the exact same thing, being in sync with one another. Well, since we know that the daily and the 4 hour are in sync, where can we see the daily time frame retrace back to before having this continuation? Well, we use the 4 hour time frame to mark off our area of interest due to the last structure break price has shown us. So on the 4 hour time frame, we just draw out structure. So on the 4 hour, we can see what? We see our price is in this bearish trend. We then have the continuation break of structure, and then price had the switch of structure back bullish due to the breakout of this lower high, and then price had another switch of structure giving us a break of this higher low. As soon as price presented us with this last structure break, this is when we grab that box tool, we mark it off, and now we count the number of rejections. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rejections towards this area of interest. This is a well-respected zone, and now we can use this zone for our entry level. Again, you can see when price is above, we treat it as support. And then when price breaks below, we treat it as resistance. So now we just allow price to retrace back towards that zone. And what happened? Price tapped back into this zone perfectly and showed a beautiful wick rejection towards this area of interest. Now, do we find our entry just yet? No. Why? Because if you take a look at the daily timestamp. We are above our daily zone. And if we just look at previous data, when price is above, we're buying back towards the upside. If I'm looking for sales, I don't want to be above a zone where price is buying towards the upside to trigger a sell position. I can enter a sell right here. Price can easily push, find rejection towards this daily zone, and then have the push back towards the upside. I don't want to do that. So instead, you know what we do? We simply wait for price to break back below. So if we continue to fast forward, we see the first break of structure happen. Are we in our time session to trade? No, we were not in our time session to trade. Or if we were in our time session to trade, I didn't have enough confluence to allow me to take this position just yet. You can see how we didn't find that position, or we didn't trigger the first position. If we continue to fast forward, what happened? Price then had another extension back up, hence is why we didn't enter, and then found another rejection towards this area of interest, forming a double top formation on the 4-hour time frame. If we continue to fast forward, what happens next? Price then breaks back below this daily area of interest where we found our position. And once we found this position, what happened next? Price fell towards targets for a 2.5% gain. And if I pull up the Discord, give me a second. You can see right here, April 9th, 12:28 p.m. Clean, called it out at everyone. What happened? Same entry, price is falling. This is the 30-minute time frame. Let me go to the 30-minute so y'all get a better visual. Boom, 30-minute time frame. You can see the same exact thing. Boom, boom, breaker structure, area of interest, our entry. Boom, boom, breaker structure, area of interest, our entry. The same trade. That's how you find your area of interest. Like, it's so simple. You just 2 time frames in sync. If we're going with the Florida market, daily and the 4-hour, use your 4-hour to mark off your area of interest. How do you find your area of interest? It's just a last breaker structure. Make sure you have 2 more rejections. And then once you are looking for your entry, make sure you are below 1, your 4-hour zone, but most importantly, your daily zone, since we are in sync. Now, I'm going to show y'all some examples of counter trend setups that we took, and we won. So give me a second, and let me pull that up. Okay, so we have USD CHF. This is a trade we took to win 2.67% in return. I'm going to click the whole thing. You can see USD CHF win for 2.67 risk reward in return. So this was a counter trend setup. You can obviously see, don't worry, it looks a little messy right now, but I'm going to draw it out so you all know what we're looking like. So on the daily time frame, since this is a counter trend, the daily should be bullish since we caught a sale. And if we draw out structure on the daily time frame, we can see how price was in a bullish trend. We had the recent break, and then price is starting to have this retracement back down. And if I drag this out over here, you can obviously see what I'm talking about. We have the recent breaker structure happening around here on the daily time frame, breaker structure. Then we have our higher high and higher low, right? You can obviously see that we are bullish and price started to have this retracement back down. You can obviously see this bearish engulfing. Well, if we go to the Discord and we look at the playbook, we know this is a counter trend scenario. Price recently gave us the breaker structure, and I'm looking to catch a sale as price is forming the correction back down. Well, now knowing we are in a counter trend scenario, what time frames do we use? Well, if we just scroll up a little bit, counter trend trading, we use the 4 hour, 1 hour, 15 minute, and the 5 minute time frame to catch our trades. So let me show you what I mean when the 4 hour and the 1 hour are in sync, and we use the 1 hour time frame to find our zones. Since we know that the daily's bullish and we're at the peak of this move, basically around here at that higher high point, and I'm looking for a counter trend setup, right? Before I go towards the 4 hour time frame, we see that price left us with this beautiful bearish engulfing signal forming from this higher high point. Once price formed this bearish engulfing, this allowed the 4 hour time frame, as you all can see, to go from a bullish to bearish trend due to the break of structure around here. We see price go from bullish to bearish due to the break of our higher low. And as soon as price formed this break of structure, you can see this impulsive move towards the downside on the 4 hour. Did the 1 hour do the exact same thing? 1 hour time frame, we did the exact same thing. You see how we had this impulsive move towards the downside, presented us with the break of structure on the 1 hour time frame. We can see the 4 hour and the 1 hour time frame are in perfect sync with one another. And so now, since we know that the 4 hour and the 1 hour in sync, we know this is a counter trend scenario. Where can I see price retrace to before it continues this move? Well, knowing that the 4 hour and the 1 hour time frame are in sync now, I simply just used the 1 hour time frame to find my area of interest. And how do I do that? We just look for the last break of structure. So on the 1 hour time frame, if we draw out our trend, we see price was in this bullish trend that then flipped bearish, right? And if I drag this out around here, what can we see? We see that the overall break of structure happened around here. Mark this off like so. We then have our new lower high happen here. We don't have a lower low point because price never formed the retracement. But looking at structure like so, where would be our last break of structure? Where can we mark off our zone? Would it be point A or point B? Point B. Why? Because point A is showing us the overall flip from a bullish trend to bearish trend due to the breakout of this higher low. But the last structure break inside of this overall trend happened around here. This is where we will mark off our area of interest. So we grab that box tool, we mark it off like so, and then we look to the left to count the number of rejections. We have 1. If I scroll, we then have 2, 3, 4, 5, 6, 7, 8, 9 rejections towards this area of interest. Well over 2 or more, so this is a good zone to use. Now if we just fast forward, allow price to tap back in 2, boom, we have the first tap back in 2. Price was not ready yet to continue this move, so we continue to be patient. If we fast forward, we see price then have a double top formation once again, and once price formed this double top formation, we found our entry off of this bearish variation pattern. Again, we have more confluence on the lower time frame to give us more of a tighter entry, but for now, we have this bearish engulfing. We found our entry at this zone, and what happened next? Price hit target with ease, as you all can see. And what was this? This was the 14th, 14th of October. Hold on, I'm gonna bring it up for you all so you can see. All right, you can see right here, 10:14, 8:18 a.m. If we click it, this is the 30-minute time frame. We entered this trade. If I go here, go towards the 30-minute time frame, you can see the same exact setup. 30-minute time frame, we entered this trade, and what took place? Price hit our target. If we go back here, scroll down, you can see price hit our target. Same trade. I'm gonna show y'all one more trade setup, so give me a second. I'm about to pull that up. All right, next trade setup, we have GBP NZD. We won for 3.87 risk reward in return. Let me show you. So on GBP NZD, we can see on the daily time frame, clear as day, price is bullish. We have the recent break of structure. We have that higher high and higher low. When price was at the peak of this move, we see a beautiful 3-bar reversal that is followed up with the bearish engulfing past this previous bullish candle. Going back towards the Discord, if we go towards the playbook and we look at the cheat code again, we are at setup number 4. Price gives us the breaker structure on the daily time frame, and we're looking to catch the sell back down towards the downside. So if we go back towards the chart, knowing that we're in setup number 4, we're in a counter trend playbook. We're only using these time frames to catch our trade. So now if we go back towards the charts, we see that the daily is bullish. We see that the price formed a bearish engulfing from our daily structure at that high point. That bearish engulfing allowed the 4-hour time frame to go from a bullish to bearish trend due to the breaker structure happening around here. As you can see, when price formed that breaker structure, did the 1-hour time frame have this same impulsive move towards the downside? Yes, we can see clear as day. Price had the same move the 4-hour time frame had in order to present us with the breaker structure. We have the 4-hour and the 1-hour time frame in sync in a bearish trend. Knowing that we're in sync, where can I find my area of interest? Since we're in sync, we just use the 1-hour time frame and the last breaker structure to find our zone. So if you draw your trend out on the 1 hour, you can see how price was in this bullish trend that then went bearish. We had the first breaker structure happened around here. Price then had the correction and then the next continuation move towards the downside. Once we had the breaker structure happen, we then drag our zone towards this area of interest, mark it off like so, and we count the number of rejections. We have 1, 2, 3, 4, 5, 6 rejections. You can count this, but I'm going to just say 6. We have 6 rejections towards this area of interest, well over the minimum of 2 rejections of more. So now we simply just wait for price to retrace back towards our area of interest. Boom, price tapped back into this area of interest perfectly. But what happened? Price broke back above that zone, which is fine. You simply allow price to get back below. Boom, price starts to find rejection towards these lower highs, which is good. Why? Because it shows us that we're still maintaining in this bearish trend. Until price gives me a breakout of my lower highs, I'm still bearish. Until price gives me the continuation move past these lower lows, we're still bearish. So we found rejection, and then price got back below this beautiful area of interest, aka our entry zone. Once that happened, we found our entry, and then what happened? Price fell towards targets with no problem. Again, if I pull this up back in the Discord, you can see this is GBP NZD on the 21st of October. So if we just scroll down right here, GBP NZD, the 21st, we entered our trade at 7:04. This is the 15-minute time frame. So let me switch this to the 15-minute so y'all can see the comparison. This is the 15-minute time frame, like so. 15-minute, 15-minute. Same trade. We won for 3.84%. If I scroll, you can see, where is it? Take profit got hit, GBP NZD, right here. You can see, boom, price hit our targets with ease for 3.87% in return. It is extremely simple. Finding your areas of interest is extremely simple. It's simple if you allow it to be. If you start overcomplicating stuff and start trying to psych yourself out like, oh my gosh, if this, is it right, is it wrong? The only way you get comfortable with using these zones are trusting yourself when it comes to your technical analysis and constantly repeating the process of just clicking a sell, clicking a buy button, trusting your analysis, and allowing price to do whatever it is. That's how you build your confidence with your strategy, with your game plan. This is how I found my areas of interest to enter my trade. And as you all know, a lot of my trades are counter trend setups, which is fine. It's not like I prioritize it, but that's just what price has shown me, and that's what I've been capitalizing on. You can see all my wins. Again, counter trend setups. I have 2 flow to market trades where we lost one, won one, but majority of my wins have been coming from counter trend setups. We have an amazing record when it comes to that. We're averaging around 2.6% return per trade, which I'm not complaining. This is how I trade. This is what I do to find those area of interest, and I'm telling you right now, it works. Just practice, repeat the process, and repetition. That's like repetition, repetition, repetition. That's it for this video. Let me know if you enjoyed. If you have questions, type it in the comments down below. If you want to respond within seconds and be surrounded by like-minded individuals that's in this trading atmosphere doing the same thing or looking to obtain the same thing that you are, which is being a profitable trader, join the Discord down below. We have 18 people, I believe, in the group. So if you need some help, you want to be surrounded by like-minded students, click the link down below. But if not, enjoy this video. Let me know what you think about this video. And make sure you like, comment, and subscribe. I'll catch y'all in the next one.